What is happening, crypto fam? Welcome back to Bitcoin Bulletin, your daily dose of all things digital assets. The market is moving at lightning speed, and if you're not plugged in, you're missing out. We've got a packed show today, with seismic shifts happening across the cosmos. Get ready, because the updates you need to hear are right here, right now. First up, we're tracking a major structural shift in the crypto landscape. Whale activity is making waves, and it's directly influencing institutional inflows. Is this a new era dawning for Bitcoin and Ethereum? We've got the details that could redefine the market. Then, a significant move in the institutional space as a key figure from the ETF world takes the helm at CoinDesk Indices. This hire signals a bold new strategy, and will break down what it means for the future of digital asset benchmarks and investor access. Plus, get ready for a game changer on the Bitcoin network itself. Bitcoin is getting an upgrade that could rival Ethereum's smart contract capabilities with BRC-20. This is huge for DeFi and dApps on Bitcoin. And finally, we're analyzing the latest market movements, with Bitcoin and Ethereum settling in, but signs pointing to volatility ahead. What do the charts say? Stick around for all this and more. Don't forget to smash that like button, subscribe, and ring the notification bell so you never miss an update. The Whale Watch, institutional tides turn. Whale activity is creating significant ripples, potentially reshaping the very structure of the cryptocurrency market and driving substantial institutional inflows. This evolving narrative suggests a potential pivot in how major players are positioning themselves within the digital asset space. The sheer volume of transactions and the strategic movements of these large holders are not just market noise. They are signals of a deeper, more complex shift. As whale wallets become more active, we are seeing a direct correlation with the influx of capital from institutional investors, indicating a growing confidence or a strategic reallocation within the crypto ecosystem. This phenomenon is particularly noteworthy when examining the dynamics between Bitcoin and Ethereum, two of the most dominant cryptocurrencies. Historically, shifts in whale behavior have often preceded significant market movements, and the current pattern suggests that large holders are actively influencing the flow of institutional money into these key digital assets. This could signal a maturing market, where sophisticated players are leveraging their positions to guide broader investment trends. The implications are far-reaching, potentially impacting not only the price action of Bitcoin and Ethereum, but also the broader adoption and integration of digital assets into traditional finance. Analysts are closely monitoring these developments, seeking to understand whether this is a short-term tactical play or the beginning of a long-term structural change that could redefine the competitive landscape between major cryptocurrencies. The increased institutional interest, fueled by whale movements, might also lead to greater regulatory scrutiny and the development of more robust infrastructure to support these larger players. The interplay between whale activity and institutional inflows is becoming a critical factor in understanding the future trajectory of the crypto market, making it a must-watch development for investors and enthusiasts alike. This evolving trend is sparking intense debate among analysts and investors about the future direction of the market, with many seeing it as a pivotal moment for digital asset adoption. But the story doesn't end with whale movements. A significant leadership change is set to impact the very foundations of crypto data. Prepare for an exclusive look at who's taking the reins at CoinDesk Indices and what it means for institutional crypto. New leadership, new horizons for crypto indices. A prominent figure from the world of exchange-traded funds is stepping into a new role, signaling a significant institutional push for crypto indices. David LaValle, a seasoned veteran with extensive experience in the ETF industry, has been appointed president of Bitcoin Bulletin Indices and Data. This move by Bullish, the parent company of Bitcoin Bulletin, underscores a strategic effort to bolster its offerings in the institutional space. LaValle's tenure at Grayscale Investments, where he served as global head of ETFs for 4 years, was instrumental in the successful conversion of the Grayscale Bitcoin Trust, GBTC, into a spot Bitcoin ETF. His expertise in navigating the complex landscape of ETF launches and regulatory approvals positions him perfectly to lead Bitcoin Bulletin's index and data business. Prior to Grayscale, LaValle held leadership roles at VettaFi, State Street Global Advisors, and Nasdaq, where he was instrumental in building exchange-traded product marketplaces. Notably, he was at the helm of Nasdaq's ETP marketplace when the Winklevoss brothers first attempted to list a Bitcoin trust as an ETF over a decade ago. Bullish CEO Tom Farley expressed confidence in LaValle's abilities, stating, "Dave is a longtime friend and business associate. I've watched him lead, build, and innovate at great institutions throughout his career. His expertise in both listed products and index businesses is second to none." Bitcoin Bulletin Indices is already a major player, with over $40 billion in assets tracking its products, including the widely followed Bitcoin Bulletin Bitcoin Price Index, XBX, and the Bitcoin Bulletin 20 Index. LaValle's vision is clear. Bitcoin Bulletin has long been a trusted name in digital asset information services, and I look forward to building on its strong foundation to deliver institutional-grade data and index solutions to asset managers and institutions globally. This hire is particularly significant for Bullish, which acquired Bitcoin Bulletin in late 2023 and recently went public on the NYSE. It highlights their commitment to expanding the index and data business at a time when institutional investors are increasingly seeking reliable pricing benchmarks for digital assets. As the crypto market matures, index products are becoming indispensable for shaping funds, derivatives, and structured products. LaValle's unique background, bridging traditional finance and crypto, is expected to help Bitcoin Bulletin Indices serve as a vital link between these two worlds, facilitating the move towards more complex, multi-token investment products. This strategic appointment is poised to enhance the credibility and reach of crypto benchmarks for a global institutional audience. But the evolution of digital assets doesn't stop at institutional adoption. A groundbreaking upgrade is set to redefine Bitcoin's capabilities. Get ready to discover how Bitcoin is about to gain Ethereum-level smart contract functionality, paving the way for a DeFi revolution on the original blockchain. Bitcoin Smart Contract Revolution, BRC 2.0 Unleashed. In a move that could fundamentally alter the cryptocurrency landscape, Bitcoin is now equipped with Ethereum-style smart contract capabilities, thanks to a groundbreaking upgrade known as BRC 2.0. This significant development, activated at Bitcoin block height 912,690, marks a pivotal moment in the ongoing effort to transform Bitcoin from a mere store of value into a robust platform capable of supporting decentralized applications, DApps, and decentralized finance, DeFi protocols. Leo Fan, co-founder of Cizik, commented that BRC 2.0 signals a new chapter for Bitcoin, moving it from a passive store of value toward a programmable financial layer. The true test, he notes, will be the delivery of meaningful applications that justify the inherent complexities of operating within Bitcoin's established ecosystem. The BRC 2.0 upgrade enhances the BRC20 token standard by integrating Ethereum-like smart contract functionality directly into the Bitcoin network's indexer. This innovation empowers blockchain developers to build sophisticated applications directly on Bitcoin, eliminating the need for cumbersome cross-chain bridges or the use of wrapped tokens. Consequently, Bitcoin-native tokens are becoming programmable and interoperable with other EVM-compatible chains, significantly expanding their utility. Eden Yago, CEO and co-founder of Bitcoinos, highlighted the transformative potential, stating that developers can now create fully programmable tokens and smart contracts on Bitcoin, make BTC itself programmable, build rollups on Bitcoin, and to use ZK to bridge BTC in an effectively trustless manner. He further emphasized that this unlocks dormant capital and enables innovation on the world's most secure and valuable network. Dmitry Gusakov, tech lead at Lido, drew a parallel to Ethereum's success, noting that the EVM has been a key success driver. He believes that comparable programmability on Bitcoin will elevate it beyond digital gold to digital golden fuel, opening doors to DeFi, stablecoins, and a host of other innovations currently prevalent on Ethereum. Compared to the Runes protocol, which prioritizes simplicity and efficiency within Bitcoin's UTXO model, BRC20 offers greater flexibility by enabling smart contracts, a feature Runes lacks. This advancement could catalyze a new economic layer on the Bitcoin network, addressing a long-standing desire among DeFi proponents for enhanced functionality beyond simple value transfer. The potential applications range from DeFi platforms and NFT marketplaces to the creation of synthetic assets, promising a vibrant new era for Bitcoin development. This upgrade is set to unlock unprecedented innovation and utility for the Bitcoin network, potentially attracting a wave of new developers and capital. While Bitcoin embraces new programmability, the broader market is showing signs of stabilization, but with a crucial warning. We're analyzing the technical indicators for Bitcoin and Ethereum to see if this calm before the storm holds, or if volatility is about to strike. Market equilibrium or pre-volatility calm, Bitcoin and Ethereum analysis. After a period of flux, both Bitcoin and Ethereum appear to be settling into a relative equilibrium, yet technical indicators suggest that underlying volatility may be on the horizon. The broader cryptocurrency market has seen a modest uptick, reclaiming $3.9 trillion in value, while traditional markets, such as the S&P 500, have experienced declines. This divergence highlights crypto's recent resilience amidst macroeconomic uncertainties. Bitcoin, leading the charge with approximately 2% gains, is currently trading around $110,735, having briefly tested higher resistance levels before encountering selling pressure. Bulls are holding the $110K mark as a crucial support level. However, the technical picture for Bitcoin presents a mixed signal. The Relative Strength Index, RSI, at 44 indicates neutral to slightly bearish momentum, suggesting room for movement in either direction without triggering algorithmic reactions. More concerning for traders is the Average Directional Index, ADX, at 20, which signifies a weak or non-existent trend, implying that Bitcoin is currently drifting rather than making a decisive move. Historically, periods of low ADX can precede significant price explosions as market energy coils. The squeeze momentum indicator being off further confirms the absence of a compression phase. These signals suggest that short sellers might be anticipating a trend reversal, while long-term holders may see current levels as an opportunity to accumulate. On a more positive note, Bitcoin's 50-day exponential moving average, EMA, remains above its 200-day EMA, a bullish golden cross configuration. However, the narrowing gap between these averages indicates a weakening trend. Predictions on platforms like Myriad Markets suggest a higher probability of a dip to $105K than a rise to $125K. Ethereum, meanwhile, has shown a marginal decline to approximately $4,303.99 despite intraday volatility. Its RSI at 50 is perfectly neutral, indicating a tug-of-war between bulls and bears, often a precursor to accumulation phases. The ADX at 26, while still above the critical 25 threshold confirming trend establishment, has been trending downwards, raising slight concerns about a potential downside break. Ethereum's 50-day EMA also remains above its 200-day EMA, supporting the overall uptrend. Predictors on Myriad Markets remain more optimistic about Ethereum's short-term prospects, expecting it to reach $5,000 before falling back to $3,500, though these odds have recently decreased. The historical weakness of September for both stocks and crypto adds an element of unpredictability. However, continued institutional adoption and positive sentiment from major financial institutions offer a glimmer of hope that seasonal dips could present buying opportunities rather than signal a broader trend reversal. Market participants are closely watching these indicators for clues on whether the current stability will hold, or if a significant directional move is imminent. That's all the in-depth analysis for today, but we've got a rapid-fire recap coming right up. Don't go anywhere. We'll be back in a flash with the key takeaways from all our top stories and your full call to action. And that's a wrap on today's Bitcoin Bulletin. We covered the structural shifts driven by whale activity and institutional inflows, the game-changing hire at CoinDesk Indices, Bitcoin's leap into smart contracts with BRC20, and a deep dive into market volatility. If you found this information valuable, do us a favor. Smash that like button, subscribe to the channel if you haven't already, and ring that notification bell so you're always the first to know when we drop new content. And tell us in the comments below, what are your thoughts on these massive market moves? Follow us on all social media platforms for real-time updates. Thanks for tuning in, and we'll see you in the next one.